I used to think that investing was hard, boring, or complicated, but I found the perfect stock investing course that showed me how to invest as a complete newbie. Now I can build wealth in the stock market and do all the things that I enjoy at the same time. Check out the Lazy Investor Stock course and get started on your wealth building journey today.
So what's going on is David W. Williams, also known as the retail trader. So we changed the name from Diamond Dave to the retail trader, doing a little bit of a transition into a different, I don't know, I wouldn't necessarily call it a rebrand because we're still talking about the same stuff. We just changed the name. Felt like Diamond Dave really wasn't doing what I wanted it to do. So we're going to move into a different direction. So it's David W. Williams, also known as the retail trader. Got to remember to start saying that. And we're going to move on from there, right? So I don't want to keep y'all here too long. I know it's lunchtime. So what we're going to talk about is investment risk. Are you buying the horse or the jockey? Okay, so here's the reason for this particular video. We've done an investment risk series before in the past, and the goal is to really get you to understand the risk around investing because it's really, really important. And why is this important? When you're investing, you always want to understand the risk that you're taking and is the return in line with the risk, right? And so that's something that we need to start understanding how to do is that when we're investing, we want to understand, are we investing and is the return that we're getting in line with the particular risk? And many times we don't know that because we've been taught to focus on everything else except that. So this is, again, when we're talking about certain things dealing with the markets, we get very little feedback. We get very little interaction. We talk about other things, excuse me, we get a lot of feedback and a lot of interaction, which is interesting because we live in an environment to where the majority of people labor for their money, which means that they have to work, they have to do active labor to get their money. Then they put their money in these particular investment vehicles, and they don't really know how these investment vehicles work. They don't know the risk that they're taking, but they're not interested in it because they've been socialized and conditioned to not be interested in that type of stuff, right? And investment risk is really, really, really important because, again, as an options trader, if I'm looking at a trade, if at the stage that I'm currently at now, where I've been trading for an extended period of time, right? I've been trading for a few years. So I'm not in the beginner stage, which would be a different scenario. At the stage that I'm currently at right now, if I don't believe that the returns can be greater than a treasury or an index, why am I buying it? Because I'm taking on a certain amount of risk to be in that trade, right? And so this would apply to any scenario: real estate, crypto, cars, any asset class. I would look at what's the risk, what is the risk-free rate of return, which is going to be the U.S. Treasury. Would a return be greater than that based on the length of time that I want to have this in here? And I want to add a risk premium to it because I know that if all else fails, I can get 4 to 5%. So somebody telling me that I can get 6%, but I feel like I'm taking on an excessive amount of risk, why would that be more attractive than to get 4 or 5% just by buying a U.S. Treasury? This is why this stuff is important. And this is also why this is not taught, because once you understand this, when you sit down at the table with financial advisors, you ask different type of questions, which means that they now have to come up with different type of answers. So that's what's really motivating this. So if you've gotten this far, this is the reason why you want to listen not only to this one, but listen to the whole investment risk series, because the goal is to make it to where you can make better economic decisions because you have better economic information inside your head. And you'll find that you will sometimes come at odds with a lot of people who don't have the same information. So they're not necessarily aware of how to make better decisions. So they will think that you're doing something weird, but in reality, you just got better information than them around these type of situations, okay? So that's what we're going to talk about. So we want to ask, when you're looking at a company, are you buying the horse or the jockey? So when you're looking to invest in a stock, are you buying the horse or the jockey? And that's the question I'm asking the audience. When you're looking to buy into a stock, are you buying the horse or are you buying the jockey? And so this is a term that you hear a lot of times in the stock market where they'll say that this particular stock is a nag. And what they mean is that this particular stock is not a good stock to put your money behind. And so the reason why we're using this particular comparison, because I think it makes it easier for people to understand it than maybe necessarily teaching people about Sharpe ratios and things of that nature. You can learn about Sharpe ratios later, right? But when you're looking to invest in a stock, are you buying the horse or are you buying the jockey? And so that's going to be really, really important, because then it starts to frame how you look at making an investment decision. And in my opinion, you should look at, when you're looking about individual stocks, you should look at it this particular way. How do I make this investment decision based on, am I buying the horse? I'm buying the jockey. Why is this important? We talked about it again. If you don't know, you could be taking a large amount of risk that may not be compensated for in returns. The goal of what I'm doing here, if you look at Raz Hassan, how he was able to take information from this course and go out in the real world, right? And do things in the real world, or what he learned from not only a course that me and him engaged in, I want to say now going on 3 years back, and also the channel. The goal is to get you to that point, right? That's the goal. There is no other goal, right? And so that's why I ask you questions, because what I'm trying to do is understand, do you understand what I'm saying? Because I speak to people all the time through my channel, and I realize maybe some of them don't understand what I'm saying. I asked the other day, asked people, how much have you read? Somebody said, well, I listened to an audiobook. I'm not sure that listening is reading. So the reason why I ask questions is to try to figure out, is there a communication breakdown? Are you understanding what I'm saying? Because if somebody says, how much have you read? And you said, I listened to an audiobook. Well, we may have a reading comprehension issue, because the question was, how much have you read? So it may be an issue of reading comprehension. It may be an issue of eyesight. It could be a lot of issues, but without questions, you don't know, which is why I'm not a favor of the model where you just talk to people and they never say anything back. And then they assume that they've gotten some good information. That works for scale. It works for masses, but it doesn't really work to change the real world. It works to sell products, things of that nature. When you don't know whether or not you're buying a jockey or the horse, you don't know if you're taking on a large amount of risk that you're not being compensated for in returns. That's the most important thing, because you don't know the difference. Okay. So the horse, that's going to be the business model, the market, or the operations. If you're looking at a company and you're buying the horse, you're buying the business model, you're buying the market that they're in, and you're buying the operations. That's what you're buying. That's the horse. Okay. And so if I'm looking to invest in an individual stock, I like them because I like their business model, I like the market that they're in, and I like their operations. So I like what we're calling the horse, right? If I'm buying the jockey, it means I'm buying the CEO, right? We're in this weird era now where there's this code of personality built around CEOs. This kind of started with Steve Jobs, and it's kind of built up over the past few decades, where people fall in love with CEOs. The internet has allowed people to do that. When I was coming up, you have very little access, if any access, to the CEO, right? Earnings calls weren't even recorded. The earnings would come, they put out a transcript, right? So we're now in this weird era where people can promote the CEO and the story. They get to come on CNBC. They get to give their story. That didn't exist 25, 30 years ago. So there was a lot less opportunity for you to fall in love with the CEO. Phil Knight ran Nike for years. Most people had no idea who Phil Knight was, because we was in a different era, right? Cable television really created a financial show. How did people watch stuff about finance before that? I don't know, right? So we're in this era now where people now can fall in love with CEOs. That's the jockey. Okay, so we got to know the difference between the two. So a horse example would be Apple or be Amazon, right? Apple has gone through Steve Jobs. Now we got Tim Cook. You rarely see Tim Cook. Tim Cook rarely makes any kind of public appearance. Tim Cook is not on Twitter. He doesn't do anything to raise his profile. Apple is one of the best managed companies in the whole world. Their margins on what they sell are ridiculous. People have no idea. That's why them doing manufacturing inside the United States is folly. But you can't tell people that, because they know so much. So just leave it alone. But their margins on what they sell are ridiculous. They got some of the highest margins in the hardware game that even exists. Like, they're just ridiculous, right? They're extremely well managed. They're extremely well managed organization, right? That's a horse. Amazon is a horse. They lost Bezos. Bezos is doing his thing with his girlfriend. Amazon's still running. Nobody can really tell you who's the CEO of Amazon right now. Who is it? Nobody knows. Amazon's still Amazon. Server games still doing their thing. They still got the distribution, right? They still have the fulfillment centers. They still have all of that going. Who's the CEO of Amazon? Who knows, right? But the operations are still there. The market is still there. They're sinking a lot of money into artificial intelligence. All that's still taking place, okay? A jockey example would be Tesla, right? So Tesla, Elon Musk, right? Where everybody is fixated on what the CEO was doing. And the CEO was going to solve all the problems. And the CEO was going to do this. And the CEO was just this brilliant person. So we built this cult of personality and we built this narrative around the CEO. And then from there, that justifies our investment decision. And so whatever the CEO tells us is going to come true. And we're waiting for the CEO to give us a proclamation. And when you ask the average investor in those deals about the operations of the company, they can't explain it. They have no idea. It's just, this is what the CEO said, and this is what the CEO, and this is what the CEO. So that's the thing. So I don't know why so many people will buy into Tesla like that, but that's just what it is. So here's this quick video that I want to show you, kind of using Tesla as an example, in which Dan Ives is going to kind of talk about some of the issues going on with Tesla and why he thinks Musk needs to take certain type of moves to bring that stock back. Let me pull it up real quick.
Less than a month ago, you said the best is yet to come. You said you think it's going to be a bet for the ages in terms of Musk on Trump. When it comes to autonomous, it's worth trillions of dollars. That continues to be the golden goose, and it's what they're focused on. You thought his proximity of power was going to unleash this epic demand for Tesla. What happened?
Well, look, I mean, medium and long term, it's that. In other words, autonomous is the future. I believe the federal autonomous roadmap will be there, and that ultimately all of this would actually just be noise relative to what could happen in terms of what that means. That's worth $1 trillion to the story. And that's why I think this is probably the biggest sort of physical AI play out there. But that said, this near-term situation is unsustainable. And I think no one expected that he would dive so into the deep end of the pool when it comes to Doge. That's where he's spending all of his time, always in Mar-a-Lago, always the White House. And I can tell you from Tesla shareholders, it's at a point where white flags up. He needs to change, needs to balance. Otherwise, everything we talked about, autonomous, bet for the ages, this negative, the brand issues, that then starts to actually taint some of the long-term impact. That's our concern here. And that's why, we're really communicating that to Tesla and the board.
Okay, so the question is, why is Dan Ives worried about Musk not being active in Tesla? Okay, Tesla is a multi-billion-dollar organization. Okay, they have manufacturing, they have fulfillment, they have distribution. They got to have some kind of way of getting those cars to you. They have all these different aspects of their business. They're running a real business. Why is Dan Ives worried about Musk not being active? Right? And so you got to ask yourself, if Tesla needs Musk to be active in the company, what have they invested in? And so Ives is selling a stock narrative around a narrative created about a CEO. Musk has to be this brilliant, people say now he's a genius. So he has to be this brilliant genius in technology. And he has all these great ideas. And he knows how to lead in this particular director. And so if it's almost like if a child, they talk about how children can be raised properly without a father in the home. It's almost that same concept, where if Elon Musk is not active in Tesla and the shareholders don't see him being active in Tesla, then that's an issue. So Ives communicating to where all these things that we talked about with the autonomy and the yada, 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 it won't come to play if we can't get Musk to divest out of Doge and what he's doing down in Mar-a-Lago or DC and to focus more on Tesla. Here's the question you want to ask yourself. Tesla went public 15 years ago. It didn't go public 6 months ago. Tesla went public 15 years ago. It's a publicly owned, it became publicly traded. How come the business can't stand for Musk to go away for 365 days? So this is a company that's been publicly traded for 15 years. You telling me that this company cannot stand for the CEO to walk away for a year? Right? And I talked about this before. They should have already created a scenario for Musk to leave the company and just be a founder and put somebody else in the position. But the way they built this thing out around this code of personality around this one central figure, the central figure still has to be involved in what's going on in the business for the shareholders to feel comfortable being involved in Tesla. Because if you look at Tesla, Tesla only got around 40-something%, maybe 50% institutional investment. It's not a heavy stock with a large majority of the shares are owned by institutions. Tesla has a really, really big retail footprint. And they sold those unsophisticated retail investors on that Elon Musk is going to lead the way. He's going to take us to the promised land, yada, yada, yada. So as a result, they got to be there. So these are the questions you want to ask yourself when you're looking to invest. What are you investing in? The horse or the jockey, right? When you're buying an individual stock, you need to know what story that you're buying. Okay? Dan Ives is spinning a story around Tesla so he can sell it. He's sell side. He's trying to sell Tesla stock to funds and institutions. So you need to understand what story are you buying? Then why are you buying the story? Often when I speak to people about stocks, they don't know the story that they're buying and they don't know why they're buying the story. Right? Now, if you ask them about some way out stuff that don't even halfway make no sense, they experts on that. You know, the earth being flat, Putin really being a good person. They can talk for 5 hours about that. They know all the intimate details of the situation. Right? But when you ask them about the stock that they say they're going to buy, what's the story around it? Then why are you buying that story? And they can't tell you. Right? It's what somebody told them, because that's how they learn everything, is what somebody else told them. And so what I'm asking you to do is that as an individual person, when you're buying individual stocks, you need to kind of know the story that you're buying. That's how you understand the risk that you're taking. And then ask yourself, why am I buying this particular story? If you ask me about Philip Morris and why I'm so long Philip Morris, I can explain to you the story that I'm buying. I can explain to you why I'm buying that story. Right? When you ask me about Republic, which is a trash company, I can explain to you the story that I'm buying. And I can explain to you why I'm buying that story. I just talked about yesterday in my Discord. I cut all my car puts. I got multiple videos on here around why I was bearish on car, my narrative, the whole setup. I understood it. So the reason why I understood it so that when it went against me, I could understand, do I still have the same narrative or has the narrative changed? If you notice, we're right back at where I said I was going to go. I was just early on it, which can happen in the market because of sector rotation. But cars trading at around where I felt like it should be trading where it was at before the pandemic, around $50 to $60. That's what it is. It's a $50 to $60 stock. Often when I'm speaking to people about investing in an individual stock, they don't know the story. Right? And if they claim they're doing technical analysis, then that's cool. Just do technicals. But many times people are buying something. They don't know why they're buying it. They don't know the story, and they don't know why they're even buying that story. So that's what people got to kind of ask themselves from an investment risk standpoint. Are you buying the horse or are you buying the jockey? And if you're buying the horse or you're buying the jockey, what's the reason why you're buying the horse and buying the jockey? Do you really understand? Because it's your money. And like the majority of the world, you have to labor to make money. You're not living off investments. You're not living off real estate. You got to leave your house or do something in your house to actively make money. So you got to spend time to make money. So I want to really encourage you to value how you make your money and understand that I need to put my money in things that I understand. And I maybe need to learn stuff so I can learn where I'm putting my money and justify what I'm doing. Right? Because in this investing space, everybody got a story around why they need your money. The question is, do these stories make sense? Right? All these CEOs got a story around why they need your money. The question is, does the story make sense? Right? And so that's the goal of this investment risk series. I want to really encourage you to go through the rest of the series, ask questions, reach out to me, ask questions about it, and let me know if you have any feedback, yada, yada, yada. We're going to go through these comments and we're going to get up on out of here. So what's up to Jay Preston? Always moving around the country. What's up with it, bro? Came to the event. What's going on to Thomas? What's up with it, bro? What's up to the Bay? Blossom and Bloom, hope you're having a great quarter. What's up to Drop 16? So Drop 16 says, because Tesla isn't well established, they're still in growth, so they need leadership. Drop 16, I don't think Tesla's in the growth stage anymore. I think they're contracting, right? And I think that after 15 years of being publicly owned, they should have established a management structure that allows he's really not the founder of Tesla, but we'll get like sidetracked off that. So we'll call him the founder of it going public. After 15 years, Musk should be able to step away from that and go do whatever he wants to do. And there should be management in place to execute on what else they're doing. Because if we notice, when he was doing SpaceX, when he was doing Twitter, when he was doing the little cyborg implant thing that he's doing, that wasn't a problem because it wasn't high profile. It's when he started taking high profile stuff with Doge and interviewing on Fox and yada, 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 it's detrimental to their market. And that's something I talked about before, right? He shouldn't be so personally attached to that brand where he can't do what he wants to do and it negatively impacts the brand at this stage, in my opinion. We're 15 years into it being a publicly run company. I'm trying to figure out how to build out people around me, and I'm in year 5 of this. And I'm trying to big out people to where I can go do other stuff and not have to constantly do day in and day out stuff. And I'm in year 5. He's in year 15. He's on a multi-billion-dollar organization. My anticipation of management would be different, but they built it off a cult of personality. Elon Musk has to keep showing up. If Elon Musk don't show up on an earnings call, that stock gonna tank because the people won't be able to deal with it because they need Elon Musk to constantly be there. Yeah, Webb Bush owns Tesla, so they're trying to sell Tesla to the buy side. So Amika says, underlying business model does not have longevity unless Musk is pumping it. Yeah, I mean, it has a lot to do. He's a really good marketer. He's really a stock promoter. But people have to know what a stock promoter is. And I talked to somebody about earlier today. There's a really in-depth story around how Tesla was able to become very profitable. Most people can't understand it. And that's why, as an individual investor, I wouldn't buy it. Because I understood what actually allowed them to become profitable as a company, because I understood their business model. That's why I wouldn't buy it. I would trade it, but I wouldn't buy it, right? And I don't think the self-driving is going to work because I don't think they have the technology, because I've said this before, if they had the technology, they would have already released it, which means that they don't have it. But if I have bought into this deal, I have to believe the technology is coming. I don't believe they have it, because if they had it, they would have released it by now. Because why not release it if you have it? So, but I just see it differently. But I'll trade it though. Made a lot of money on trading Tesla this year. Gonna keep making money on it. Because I got a real good, I got a guy that gives me source data from China, from Germany, wherever. Real good data source on Tesla. That's allowed me to do a lot of really good trades off Tesla. Right? So big up to source data. Drop 16 says people not willing to do the research. They're just looking at a chart and hoping and wishing. Definitely. But Drop 16, I don't think they know how to do the research. And then I think the people that do know, they're not willing to do the research. Right? A lot of people, even to this day, Drop 16, they think making money is magic because it's been sold to them that way. Making money is not magic. Making money is the byproduct of a system. It's not magic. Right? So a lot of people still in 2025 would think that making money is magic. And it's not. It's really not. But that's what people believe. What's up to Anthony Bass? Jay Press says, I'm buying the horse. I feel you. You won't trade Tesla on research because it trades. It's easily manipulated. Yeah, I mean, manipulating it to me is subjective. I know I've been trading Tesla for a long time. I know how it trades because I know the market that's in Tesla, right? It's a retail stock. So because I know it's a retail stock, I know that they're going to pump it, right? So I can play the pumps and I can also play the downside to it because it's very emotional because they're pumping it. Where Philip Morris, the CEO of Philip Morris, don't pump the stock. He doesn't pump it, right? So it won't trade like Tesla. But it's not. Philip Morris is based around products, right? They sell an addictive product. So because they sell an actual physically addictive product, right? They don't have to do none of the stuff everybody else got to do, right? Where Tesla, it's a story that, and I'm not talking about you personally, but because we live in a world where people don't like to read, they don't like to do real research, to actually figure out what's actually going on with Tesla will take hours of research that the average person is just not going to do, right? They're just not going to do it. They'll watch Netflix for hours, but they won't spend hours on research, real research, like going to where the sources of the information are. Not there's some dude on Instagram or some dude on Twitter, and I just, repeat everything he tells me. Nah, that's not really how you do research. And I'm still amazed that so many people got out of college. They got college degrees and they don't know how to do real research. That's amazing to me, but it is what it is. I think the internet got a lot to do with that. But it's not, there's a story behind it that a lot of people don't really understand. And if a person is bullish Tesla, they'll never believe the story if you presented all the evidence to them. They'll never believe it. Like I put in the Discord that in Houston, the dealership has parking lots full of Cybertrucks they can't sell, right? But people, if you're a bullish Tesla, you're not going to accept that information, right? So it is what it is. So like I say, I won't buy it, but I'll trade it. But I know some really, really smart people that are bullish on Tesla. I can't get myself there. Do I consider Tesla stock only seasoned investors should trade? Again, season will be subjective. I wouldn't think anybody that's been trading under a year should trade Tesla because I don't think they understand the volatility of it. It's very, very volatile. It shows up in their premiums. It shows up in a lot of different ways. It's extremely volatile, and it's not as volatile as it used to be 3-4 years ago. What I do like about Tesla from an option standpoint is very liquid. It's extremely liquid. So you can get in and out with a lot of slippage. It's very liquid because everybody's on every strike, right? You can go out $300 and they're there. It's a very, very liquid stock, and it's very volatile. A person has to understand how to manage volatility. That sometimes can take time, right? It can take time. So season, again, would be subjective. I would say under a year of a person trading, I wouldn't recommend it to them, which is why I don't recommend to people, which is why I don't tell people to take my trades. Because the goal is to take people that don't know and to get them to a certain level. If you don't know how to trade, you haven't been trading, over a year, sometimes over 2 years, a lot of the stuff I trade won't work for you because a person would not understand the volatility around it. So big up to the put game, Mr. Bass. I think today is a dead cat bounce. We'll see how next week starts off because anything can happen over the weekend with the president that we got. Drop 16, I'm going to start researching paper trading, but I'm going to spend months researching and looking at the chart. One good thing about Tesla's chart is it really tells you what direction it's going to go in. It's an easy chart to read because, again, it's so liquid. There's so much volume behind it. Drop 16, if you just look at support, if you just learn exactly what's in the course, if you just learn support and resistance, you can trade Tesla. But a person has to learn support and resistance. Most people don't want to learn it. They want to learn this exotic stuff. If a person learns support and resistance and volume, they can trade Tesla because it's on the chart because it's so liquid. It's a very liquid stock. So it's like Apple, it's like Amazon. It's easy to trade if a person does the chart time and they understand support and resistance, which is what I teach in the course. I teach support, resistance, and moving averages, right? But the thing is that Tesla, it was a artificial play that now the artificial, I don't know if this word is actually grammatically correct, but I'm gonna say it anyway. The artificiality, which is not a real world, but the fact that it was an artificial play is being taken away from it. Because if you notice it, everything that it gained right after the Musk-Trump partnership, it's lost all of that. So it went up to like 450, 460, and then it just sold all the way back down. Right? So that's the thing, is that people have to really understand just how, like, again, the volatility is what's going to hurt most people, because what you see is people are either overly bullish or overly bearish on it. I'm neither. I'm just here to make money. I know what Elon Musk did. I know what Tesla, I know how he actually made his money. Like, I actually know it. It won't help me to be mad at him because that's what he did, because we're just in an era where his skin color and his network allowed him to do what he did, right? He was selected, same thing that Mackie was talking about on the Pivot podcast. He was tapped to be right where he's at, right? They decided that he's going to be the richest guy in the world. There's nothing I can do about that. So me being mad at the dude is a waste of my time. The question is, how could I make money off the scenario? Because I actually understand what that actually is, right? But I would never, I won't invest in it. I won't give that guy $1. I won't buy not $1. Like, to me, it's not a good investment. Like, it just doesn't make sense. But that's me. Everybody's different. I know some very intelligent people that are bullish on Tesla. Like, I'm talking about Harvard graduates, the whole 9 yards. They're bullish. I don't get it. I don't see it, but everybody's different, right? So it is what it is. Like I said, if it's weird to me, I know a lot of PhDs and I got like a bachelor's degree. It's interesting. So my friend trades it all the time, only buys contracts for 2 or 3 days theta. Yes, I don't buy weeklies like that. I'm more of a swing trader or a leap trader. And it still works because of the volatility. But I don't buy, to me, it's too volatile for me to buy short term on it. I'm not saying I haven't bought weeklies on it, but all my trades I made on Tesla, like I exited out of some Tesla trades on Monday after that big sell-off. Those were June expiration contracts. I've been trading the June Tesla date for, I don't know, 60, 90 days. Been trading that June, different strikes, but it's all been June expiration as it kept selling off. Just kept buying more Junes. Right. And I put a post up on the community wall. Me and Miss Eve talked about it. I said I took profit on Tesla. I got back in on some more puts, more June expirations, took profit on them on Monday, got into some more, because like I said, I got a data source on Tesla now. So I don't have to go by what Dan Oz tell me. I got a data source that's giving me source data. So that's what I'm looking for. If I can get more sources of data like that, I can be a much better trader because I'm getting stuff straight from the actual source. And I'm able to cut through all the noise, which is, to me, what I'm always been looking for. That's how I've always been successful. I go straight to the horse's mouth. I get the information from the horse. The rest of this stuff, it don't mean nothing to me because, you know, we in the internet era, man. People just make content just because they bored, right? They ain't talking about nothing. And so people be trying to base their assessment off of that. And it's just a person on the internet just making content. Amika says Lucid does a better job of making higher E and EV product. Yeah. So I think that I don't think any administration is going to allow China to dump EVs here, right? But that's not the reason why Tesla actually is profitable, right? It's also not the EV mandate. It's something totally different that nobody talks about. But it's there in documentation if people actually go do the research. So I don't think any administration allows China to dump EVs here, right? I think we got a better chance of the Japanese car makers bringing EVs here, but they're not really interested in doing EVs like that. Honda and Toyota not really interested in EVs like that, right? Because there's really not a big market for them. But because people don't really understand, and I'm not talking about you, Amika, they don't really understand business models. And I talk about all the time, how does a company actually make money? Not what they talk about, but look at their documents. Because they don't know how to do that type of stuff. They have to go with what somebody told them instead of going through the document. And it's in the document. Tesla's a publicly traded company. So unless they're going to do accounting fraud, which they've been accused of, it has to be in their documentation how they actually make money. But they know nobody's going to go through it. So like I said, the world we live in, because people will not read, they can put the secrets to life in a book and put it on a person's table in their house. And the person will never open the book. They'll go on the internet. They'll watch a million YouTube videos. They'll go on Twitter. They'll do everything else except read that book. So these people know that they can do that. They've been doing it for years. Anything you want to know about certain tribes of people, it's all in documentation. You just got to read, right? That's all you got to do is read. So years ago, Dr. Clark went to Spain and was able to actually get information on a lot of different things because why? It was in books in Spain. Nobody went over there to go read the book. It was sitting in, I think it's called Alhambra. It was sitting in Spain in books. He just had to go to the library. Them people don't be hiding nothing. They know you're not going to read the book. So they can publish the information every 90 days because they know if I go on CNBC or if I go on, Bloomberg and I do an interview, people will go off to what I say on the interview or what I say on the earnings call, and they will never go through our documents. Right? That's just the world we live in. So because I love to read and I love to do research, and I actually was trained how to do research properly, I will keep looking for something until I find it. And I know, because I come from a different type of situation, how to get good information from people straight from the source of the information. I learned how to do that a long time ago. Because when you're moving around, it's so much stuff going on. People, even before the internet, it's a lot of just chatter and noise outside, but you'll never know until you find a person that can give you information directly from where it's coming from. And that's the most important thing. So that's why, like when Erica gets on here, Erica is a great source of information because why? She's in the industry that she talks about. So when Erica talks about as an investor, how she looks at real estate in a certain city, I would encourage people to listen to that because why? She's a real estate investor, been one for decades. It's a family business for her people. So it's not just some YouTuber telling you that the real estate market is going to crash. It's a person that's an actual real estate investor telling you, well, this is how I look at Detroit. Well, this is how I look at Cleveland. Well, this is how I look at Chicago. That information is worth money. But because it's being presented to them the way it's being presented, I don't think people realize what's being given to them. That information is worth money, right? But the person that's telling you the real estate market is going to fall, and they throwing this fake data up on the internet, that's the person got a big old channel. So it's just the world we live in, bro. Got to take it how it comes. That's all we can do. What's up to GC? Got to take it how it come, though. Drop 16 says they tell you in reports and you review what streams of income make up the most of their revenue and the risk to that in the current economic environment. Definitely. It's in the reports, right? It's there, It's something that I talked about years ago. Kamari, who's over there with Body Hood, who been over there, he ain't new to the situation. He talked about people take a basic accounting class at the community college. I told people that years ago. One of the best things that helped me for my major when I was in college, I had to take financial and I had to take managerial accounting. I'm the farthest thing from an accountant, but I can read accounting statements and I know how to say, okay, I don't understand this. Let me go look it up. And one thing I do know is that the more complicated accounting is, the more they're trying to hide. Because I do cash accounting for my business. My accounting is very basic. I do cash accounting. When a person's trying to hide what they got going on, the accounting start getting real complicated. Why? Because they're trying to hide stuff, right? But I really think a lot of people would benefit from that is go to a community college. You got financial and you got managerial. You probably don't need to take managerial, but I think a lot of people would benefit from taking financial accounting, learning how to do a statement of retained earnings, learning how to read a balance sheet, learning like operating margin, return on equity, return on assets, what those things are. PE ratio, and then realizing that a company can have an extended PE ratio and it don't mean nothing because of a lot of other things going on. But like I know what's going on with Tesla. That's why I don't argue with nobody about it. And it's not about me arguing with nobody about it, because it doesn't matter what I say. If a person is buying into the idea that Elon Musk is a genius and he's going to take them to the promised land, God bless him. God didn't put me here to try to tear that man down. What's going to happen is what's going to happen. But let me explain something to you, the way this game works. You don't become the world's richest man if the people that was who they was before you became that don't want you to be that. That's not how this game works. Okay? There were people that were who they were before Elon Musk was who he was. You do not become the world's richest man if they don't want you to. That's not how this game works. The game don't work that way, right? But people will talk about all this deep state and all this other stuff, and they can't see that part of the game, which is why I don't go back and forth with folks. You just don't become the world's richest man just because you got a good business. The life don't work that way. Not in this system. Like, that's not how this thing works. And it never worked that way. It never will. Right? This stuff is set up, it's organized, and it's structured. And they let people do certain stuff because they trying to push something. Elon Musk participated in something that these people were trying to do. And as a result, they made him who he was. That's how this thing works. It don't work any other way. This stuff is very structured, very organized. The average person has no structure and organization. The way this thing works is very structured, it's very organized, right? So we're going to get up on out here. Want to be here too long. Big up the Ray Gun, man, with the $2 super chat, sponsor the show. Want to encourage everybody to make sure that they hit up the YouTube memberships, right? We're going to keep putting content behind that. This is going to be behind the membership wall too. We're going to keep putting stuff behind the membership wall. Want to encourage people to help the memberships. It's a small price to pay to get a lot of really, really good information. And, you know, learn how to read balance sheets. Learn how to understand where the actual corporation actually makes their money, not just what they're selling on the internet, or they selling while they're doing the CNBC interview with another entertainer who made all his money as an entertainer, not as an investor, right? Which is Kramer. And so you got an entertainer and another entertainer. Kevin O'Leary's an entertainer. Kevin O'Leary didn't become wealthy in business. He became wealthy off entertainment. But his job is to play a business person on the internet. And people buy it because why? They don't know what a business person looks like. They don't know what a successful entrepreneur looks like. So he's able to play a role. It's like WWE. Go watch old Ric Flair promos. Some of y'all don't know who Ric Flair is, a wrestler. Go on YouTube, type in Ric Flair promos. And you'll see how Ric Flair promoted not only himself, but the other wrestlers and also the promotion. He the best ever did it. It's a production. And you got to really realize that this stuff is a production. It's you that bought into the production. I don't buy into it because I know it's a production. Right? You bought into the production. I don't buy into it. That's why you can't present these folks to me, because I know that they're part of a production. Right? I deal with what's real. I don't deal with people that's part of a production or people that aspire to be part of the production. So they wouldn't do anything they can do to be part of the production. I don't deal with that. So that's the problem, is people can't see the production, so that they can't differentiate between a horse and a jockey. They just can't. They don't have the ability to. So they have to either buy into, 9 times out of 10, they're going to buy into the jockey because they don't have enough understanding around businesses and, you know, what's going on, to buy into the horse. So they just buy into a jockey. Then when that jockey falls off, they buy into another jockey. Then that jockey falls off. So, you know, they tried to make the CEO of NVIDIA the new jockey, but he wouldn't play into it. So then they had to run back to Elon Musk, right? Because the CEO of NVIDIA, he wouldn't play that game with them. So then they had to fall back to Elon Musk because they have to give people somebody to focus on, right? So that's all that's going to be, man. We ain't going to be here too long. Hope everybody have a good week. Y'all stay safe. Big up to Amika Khan, the $5 super chat. Big up to Corporate Checks TV, the $1.99. Be easy.